Hey guys, how's it going? And welcome to the third video in a 6-part video series all about price action. If you missed the first two videos, make sure you go give them a look. The first one's about price action in general, and then the second one's all about horizontal support and resistance lines. And in today's video, we're going to be discussing trend lines and how I use trend lines to get in and out of trades, and what trend lines mean to me. So let's get straight into it. All right. So one thing about trend lines, guys, I like drawing them on daily charts. And this is basically just the higher the time frame, the more significant that trend line support or resistance will be. Okay, so you can draw them on lower time frames, but your trades will be a lot shorter. Because those trend lines seem to get violated quite quickly, and then the market does always bounce back or go further down. So yeah, I like drawing trend lines, guys, on much larger time frames. Now for me, trend lines are the visual representation of a trend in a market, A, and then B, just how weak or how strong that trend is. Now, the more touches that the market has on that trend line, and the longer that trend line has been intact, shows you how strong or how weak that trend is. Okay, so I'm going to be showing you guys the bullish trend lines and the bearish trend lines and what the difference are between them. And then I'll show you guys how to construct a channel and how to use the channel. So first of all, let's duck into a bull market, right? So let's get rid of these just for less noise. Okay, so a bull market, like discussed in the first video, is represented something like this. Okay, where you've got highs, and each high is higher than the previous high, and you've got lows where each low is higher than the previous low, right? And that's basically, that just goes without any explaining to figure out how the market's trending. So higher highs and higher lows means that we're in a bull market, so you can draw your bullish trend line. Now when constructing your trend line, a lot of guys like saying that it needs to be from wick to wick or body to body. Now for me, I'm very subjective, as long as it represents the market that we're currently in, the trend that we're currently in. Okay, so for me, drawing a trend line, something like that, there's nothing wrong with it. Every single time price has come close to that trend line, it has reacted to it. So number one, that's showing me that it is supporting the trend, and it is supporting that price movement of higher highs and higher lows. And another thing, when drawing your bullish trend line, guys, make sure that you link all your higher lows. Okay, so in a bull market, the trend line needs to be underneath the price, and it needs to be connecting all the higher lows. Okay, and one thing, like I said, the longer the trend has been going on for, and the more touches that you have on the trend, the stronger this trend is. Okay, so if Bitcoin does come back into this trend, I could almost guarantee you that price would go up. But having said that, one big thing about using trend lines is that when price does violate the trend line, it can be a good indication that the trend is changing. And I'll give you a little example from where Bitcoin went from a bearish market into a bullish market. And we'll look at that next. Okay, so that's the bull trend. Let's go into the bear trend. Now all the rules stay pretty much the same. The only difference is how you draw your actual trend line. Now in a bearish market, let's just go through that again just as a recap. You've got highs, all right, and all the highs are actually lower than each other. Okay, so you've got lower highs. Okay, and then you also have lower lows. Okay, and that shows you that currently the market is in a bearish trend. Okay, and when you draw your trend lines in a bear market, the only difference is in the rule. It still doesn't have to go wick to wick. It doesn't have to go body to body, as long as it pretty much shows the, the trend of the market. So let's start it like this. And let's just carry it on so that I can show you how it works on the reversal. All right, so in this instance, okay, and in a bearish market, you guys are always going to draw the trend line above the price, okay? And the reason for that is that you want to see how price reacts when the lower highs come into contact with that resistance, okay? And as you can see, every single time the market did try to make a new high, it came into resistance and it got pushed back, tried to make another high, came into resistance, got pushed back, tried to make another high, and got pushed back, right? So those are the only differences in the rules, guys. In a bear market, trend line above the price, connecting all the lower highs, and in a bull market, underneath the price, connecting all the lower low or all the higher lows. Sorry, right. Now the significant thing about trend lines is that the market generally reacts to them, and even once here, like where we actually reversed into the first cycle of a bull market, you can actually see that price pushed away from the trend line, and then it did retest the trend line before moving up into another higher high. Okay, so yeah, that's basically trend lines. Now, one thing that I want to just quickly go through is channels, so that we can actually get that all done in one lesson. Now, for channels, guys, they're just basically parallel lines. Okay, so drawing something like this on the market and drawing something like this. Okay, you basically just got two parallel lines, and if you pull this away, let's go like this. Okay, got parallel lines, and in the channel, every single time price comes into the bottom part of the channel, it pushes up, and every time it reaches the top of the channel, it then pushes down. So once you can establish a channel, you can obviously get a lot more trading in, where you can change your position. So I mean, here you could go long, and when it reaches the top of the channel, you could go short, and when it reaches the bottom of the channel again, you could go long. I'm not a big fan of this, and I don't really use it that often. I just rather stick to the trend lines, and I'm just going to quickly show you one trend line that I'm actually starting to build a little bit of confidence in. Don't use it just yet, but we will see in the next few days how it goes. So what I've done is I've drawn this trend line. It looks pretty strong. It matches all of my rules. Okay, so it connects all the higher lows. Okay, we have breached it once, but has reacted and come back up. Okay, we've got plenty of touches on a very large time frame. So we've got 1, 2, 3, 4, 5, 6, 7. We've got 7 touches at the moment, and I'm just basically waiting to see today if we can close in the green. And if we do close in the green, I'd pretty much say that this trend is then still intact. But one thing about super strong trend lines, like I said, is that when price will breach here, and I'm talking about a proper breach, we could definitely start looking at a bearish scenario or a reversal of the current trend. Okay, yeah. So that's it. If you guys have got any questions, hit me up in the Discord group. Okay, the Discord group is in my link, And if you like the video, please give me a like and give me a share. And yeah, that's it. I'm looking forward to doing the 4th video. Catch you guys soon.